This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
What is up, everybody? Happy Friday. Welcome back to another episode of Benzinga Live. And it is a, so far, pretty happy Friday. And whoa, wait, what happened? What just happened? I wasn't even doing this as a bit. I didn't even know we went back down. Why'd we go back down? All right, well, I said earlier on the stream, if you were watching the All Access when I was on with Mitch, I said, I don't trust this rally, especially on a Friday. Giving up those gains, it looks like right now, pretty much all across the board. So yeah, hopefully no one got faked out by that. But we'll go through some other top headlines real quick. PCE, your personal consumption index, expenditure index, the Fed's, favorite measure of inflation, came in higher than expected this morning. It didn't really seem like the market was brushing that off. And here, let me get my Benzinga Pro pulled up here. It seems like the market was brushing off, and I talked a little bit about why I thought that was earlier. We already knew inflation in August was higher than expected. So to expect the market to react from that again when it already has, I mean, we're down on the S&P 500 like 8, 9, 10% from when we got that CPI report earlier in September. So it'd be I think asking a lot of the market to react twice to that, but like I said, these rallies right now, any type of rallies we're getting while the Fed is still hawkish, while we have no sign that we're getting close to a pivot, I'm not buying it. Not buying these rallies, not until we get closer to knowing the Fed can really pivot, and that'll probably come when we start seeing more pain, more companies having to lay people off, whatever that is. Unfortunately, that's where the Fed stands right now, it sounds like. Nike. Let's talk about Nike shares. Nike trading down more than 10% today, close to 12%. Wow. Let me go ahead and get my chart pulled up. I can't get... So Nike down 12% today on a pretty decent quarter. Now we've talked about this a lot on the show before, that it's tough trying to play earnings, right? If you're trying to play earnings with options or whatever, because you could have thought, I think this past quarter was actually a lot better than people expected for Nike. And you could have been right. And the stock is still down 12%. Because it's not as much about what the company's done in the previous quarter as much as it's about what is the company going to do in the next few quarters. And Nike gave, some kind of scary guidance when it comes to inventory, saying, hey, we're, we have our inventory growing, showing that maybe things aren't exactly flying off the shelf right now. So, look, I'm not hopping in right now and trying to catch this falling knife on Nike. We talk about that again a lot on the show, that catching a falling knife, you're often left with bloody hands. But Nike is one of those names that, as we continue to move lower, looking at Nike down more than 50% from our highs back in November 2021, I am willing to go long this at some point, and probably some point here pretty soon. I mean, if you're looking at this at the long-term max chart here on Google, you can see we've been on this steady increase really since 07, 08, broke that trend line with some really parabolic growth there during COVID, and now giving up all those gains, but now kind of below that trend line. Hey, I'm willing to start a long position on Nike here soon. Not quite yet. And when I do, by the way, I don't, I'll be okay sitting on losses for a little bit if it moves down another 5, 10%. But I think as far as long-term investment, I know Nike's going to be around. Nike's going to be around a lot longer than I am. So if my thing with Nike right here is, if I don't touch it, and then in 3 years it's back to, whatever, I'll be, oh my God, why I was so silly. Why didn't I get in on Nike when it got down here? I remember thinking that about Disney during COVID, when you can see here, Disney dropped down to like $85 and then ripped up, and now we're back down there. And honestly, I'm okay with not owning Disney yet, so we'll see. Check up with the chat real quick. Aaron Bryan saying most profitable week in a long time. Thanks BZ for all you guys have taught me. Nice AB, the cooler AB in the chat today. A little bit of a lighter chat today. Looks like on Friday people might be taking off today. But I'll give you all a quick rundown for the show. So here in a couple minutes, 2 minutes, I'm going to bring on Chris Kardatzke from Quiver Quant. If you guys are unfamiliar with Quiver Quant, a great, really one of my favorite, at least TikTok accounts out there when it comes to financial content, because it's not, there's a lot of, especially since COVID, a lot of people posting stuff on Twitter, on TikTok, whatnot, that don't really know what they're talking about or don't really have good information. And Quiver Quant is pretty much the exact opposite of that. I've had James, Chris's brother, on the show before, and they're both great. So excited to get Chris on. And then at about 12:40 p.m. Eastern, here in about 25 minutes, we'll be having Erik at ES Invests from Twitter, another guy that knows what he's talking about. So some good guests coming up on the show today. Happy Friday, everybody. Smash the like if you have not already. Crypto Taurus saying, I'm not buying the crash, looking for SPY to close above. Speaking of crypto, I did see Bitcoin made a nice move today. Assuming it gave up some of those gains. Yep. I mean, this is just crazy. This was like an hour ago. We basically went straight down. But yeah, Bitcoin made this nice move from about 19,250 all the way up to 20 grand. So, yeah, I think watching Bitcoin here in this market environment, it'll be a good tell when we see Bitcoin be able to string a few really good weeks together. That might be a sign that people are willing to start taking on risk again. So I'm watching Bitcoin right now. I have literally zero crypto exposure at all right now. And I don't even know. Maybe I will buy some Bitcoin or ETH when I feel like the markets are turning around and I can make some money off of it. But for right now, I'm watching it to see it as more of a gauge of risk out there. And again, it looks like from all we've seen out of the price action of Bitcoin, it seems like as long as the Fed is tightening, as long as we're hawkish, Bitcoin's not going to be doing anything crazy. Hello, Richard C. All right, guys, it's 12:15. Without further ado, let's go ahead and bring our first guest of the day on, Chris Kardatzke. Let's go ahead and give Chris one of our very special intros and bring him on the show. Chris, welcome on Benzinga Live. How are you doing?
Good. How are you doing?
Good. So before we get started, do you want to just give a brief introduction to Quiver Quant for some of our audience who may not be familiar?
Yeah, so we're an investment data platform that kind of focuses specifically on alternative data. So pretty much what that means is that we look for anything we can find around the web, kind of outside of the realm of traditional finance, that we think could be useful in making investment decisions. And then we try to collect it and present it on our website using some visualizations and other analysis.
Beautiful, yeah. And where are you guys located?
Madison, Wisconsin. I mean, honestly, our team is pretty remote right now, but right now I'm in our headquarters in Madison.
All right, so I got the Quiver Quant website up. So what is, have there been a lot of, as far as like, you guys are I assume, like actually selling this data you're putting together, correct?
So the dashboard that we have is all free to use, like pretty much everything on here, with the exception of this new Quiver Strategy section, which we just rolled out a couple weeks ago, is all just publicly available, like free to use. I don't think even anything requires like an email sign up at this point. But yeah, basically what we're doing is we're aggregating a lot of this data, like you can see here, like on Senate stock trading, house trading, and then stuff like whale activity, and trying to provide it all in one place for people to kind of easily hopefully find some conclusions from the data.
So it's not, in terms of being an alternative data provider, you're not turning around and then trying to provide some of this alternative data to, hedge funds and stuff like that?
So we do have we allow pretty much anybody on our site, which I assume includes some institutional investors, but we do also have an API which allows people to tie in directly to the data to do their own stuff on top of it. So through that, we serve like retail clients as well as institutional clients who are interested in like building their own stuff on top of the data.
So I want to get into kind of some of the new offerings you have and some of this congressional or and Senate trading stuff. But I think for a lot of people out there, they come across Quiver and they're familiar with your guys' is social media. Is that something you play a big part in, Chris?
So personally, I'm pretty hands off with our social media. We have a guy who runs content for us. He's probably the guy who's you're familiar with his work on like TikTok. We've seen a lot of success in kind of taking this data and presenting it to people on like TikTok, Instagram, Reddit. That's really where we got our start, is just sharing some of the dashboards and the tools we were building on sites like Wall Street Bets, for instance. And then from that, we're able to get feedback from people on kind of what they like, what they don't like, and kind of what they want to see us do with this data. So yeah, it's definitely been super helpful for us, both in kind of building an audience and also just in getting feedback on what we're working on.
Yeah, and I think that's what's so cool about your guys' account, at least like on TikTok and stuff, is because there's so many people out there that post kind of like the same stuff. You guys are a good example that you can get big and popular on TikTok or on social media, like doing in-depth, actually like meaningful research. Like there is an audience out there for that stuff. It's not just an audience for what's the next Dogecoin and stuff like that.
Yeah, definitely. Yeah, I've been surprised. I'm really glad that it seems like there is this genuine interest out there and kind of more in-depth research, which is something we're definitely trying to get better at. Like we're trying to make sure that we're providing people with the best insights we can from this data.
Yeah. So let's talk about some of your I guess kind of newer offerings or tools you're working on.
Yeah.
I want to hear more about kind of the new offerings.
Yeah, so one of the newest dashboards we rolled out, you can see it under data by source on the top there. It's titled Behind the Curtain, under the government section, down towards the bottom of your screen, bottom left right now.
Okay.
Left side, right under government. Yeah, right
government.
there.
Okay. Right. New Behind the Curtain.
Yeah. So we just rolled this out earlier this week. So there might still be some bugs and other stuff in it. Like it's still pretty early in our development process. But basically what this does is combines data that we've collected on corporate lobbying, congressional stock trading, and then legislative activity. So basically what you're seeing here is a list of like the bills which have had actions done to them most recently by Congress, like being moved to committees or being put on their calendar. And then, by like opening the curtain there, you can see which companies have lobbied on it and then look at like recent congressional stock trades. So basically the idea here is to kind of give people a glance at what's going on behind the scenes in Washington.
Yeah, and so and the takeaway, or at least I would assume, correct me if I'm wrong here, is that there's a assumption that if a company is lobbying, spending hundreds and thousands, potentially millions of dollars to get a bill passed, the companies are then going to get some sort of benefit from that bill, whether it's in the form of lower taxes or subsidies or whatever. So it's good to see, okay, this bill is passed. Here are the companies that essentially paid for that bill to be passed. You can, I'm not going to say 100% of the time they're going to then like benefit and the stock's going to go up from it, but is that kind of the takeaway?
Yeah, exactly. That's definitely companies aren't stupid. They're not going to spend like millions of dollars lobbying on a piece of legislation if they don't think that kind of its success or failure will impact them financially. So that's really what we're trying to do here, is we're trying to give people a list of legislation that we think they should keep their eyes on if they have like a financial interest in these companies, or even from like a civic, like non-financial standpoint, just allowing people to kind of see which companies really have a stake in different pieces of legislation which are being worked on.
So and I know this is new, so still developing and the process and everything, but do these bills only appear here if they're passed, signed into law, or they or is this the last update?
Yeah, so basically this is a sorted list based on when there was most recently an update pushed to the bill through like the congress.gov website. So that'll come up when it's like sent to different committees, or like you said, when it's passed. So there's a lot of bills which are proposed and which nothing really happens to them. we try to. I think this is a pretty decent list of bills which are actually people should be paying attention to because A, it's stuff that Congress has actually acted upon, and B, it's stuff which companies have actually decided that it's worth spending their money to try to influence.
Yeah, maybe if you're open to some, I don't want to give you any unsolicited feedback, but what
No,
I think could
suggestions
be
are great.
what I think could be cool visually here is if, and maybe you need to work with someone like some sort of like someone who understands that the process of getting a bill signed into law, but some sort of like progress bar, basically just either like red, yellow, or green, showing the progress of the bill. Like this is still in early stages, meeting in
Yeah.
committees, they're having hearings, versus this bill's like getting ready to be sent to the Senate to be signed into law.
Yeah, definitely. Yeah, it's funny you say that because it's actually on a pipeline for things we want to add. Like a lot of these updates probably don't mean a lot to most people who aren't very familiar with kind of how the legislative process works. So yeah, it's definitely something which you're planning on hopefully adding in the future is giving people a better idea of kind of where these bills are actually at in the process.
Yeah, I think that'd be really cool. So let's go back. I know there was some other new. So you see, we have DC Insider Score.
Yeah, so this is another one that combines a lot of different data sets. So it combines congressional stock trading data, corporate lobbying, and government contract data, basically to rank companies based on how closely they're tied to DC. So like at the top, you'll see like a lot of defense contractors. Like yeah, Boeing is number one because A, it spends a lot of money on lobbying. B, it receives a lot of money from the government and contracts, and C, there's a lot of congressmen who trade stock in Boeing. So this is kind of like yeah, it's kind of a way of seeing
And are
how
you guys kind of coming up with these scores on your own between the lobby and awards, Congress trading?
yeah, so those scores can roughly be translated to like what percentile they fall in within those different categories. But yeah, those are scores we came up with on ourselves by hand.
Man, so you and your brother James started Quiver?
Yeah, that's right. We co-founded it, I think about 2.5 or 3 years ago.
Yeah, I want to say the first time I spoke to James, it was like maybe even less than a year old. We've been doing this show for a while.
Yeah,
How and you guys, were you guys at University of Wisconsin Madison,
yeah, that's right. We were at UW-Madison when we founded it.
and finished with school now?
Yeah, so I graduated a year ago. I think yeah, a year and a half ago. James graduated 2 years ago.
Nice. Both like what is your guys' back like? How'd you get interested in stocks and finance? You guys come from more of like a data background.
Yeah, I'd say I have a little bit more of a data background. James has a bit more of a finance background. In college, in our freshman year, we did this algorithmic trading competition out at U Chicago, which I think is really kind of what spurred us to really pursue, I guess, a project together in the like the financial space. Because during that process of competing in the competition, we obviously worked together to create different like algorithmic trading strategies, and we had a lot of fun doing that. So we decided we could take on a bigger project, I guess.
Yeah, and it seems like there's a lot of interest. I see like a lot of TikToks now and stuff of people tracking different congressional trades and whatnot. Is that something that you guys have just found interesting from like a data standpoint, or do you also have like an interest in politics?
Yeah, I think it's kind of a mixture of both. Like we definitely approach it from kind of the financial angle. But with that being said, there's really a strong civic angle as well, where like it's good data to have not only as someone who's might be interested in like trading different stocks that are also being traded by politicians, but it's also just useful data as like a U.S. citizen to keep track of like which politicians are maybe spending a bit too much time in the markets.
Yeah, and I think that's one of the things that actually has, it's like politics now these days are so polarizing, but
Mhm.
that's one of the things that I think people on the left and right agree on for the
Yeah,
most part. Like most everyday Americans agree that, yeah, the people making laws probably shouldn't be able to like trade securities,
yeah,
especially within, that's what's crazy to me is there's no like you can be on the like Senate Finance Committee and be trading Bank of America and JP Morgan. It makes like no sense to me that
yeah.
that should be allowed.
Yeah, definitely. Yeah, there's I mean there's been polls done. There's super strong like bipartisan support for more regulation on stock trading by politicians. But I mean the issue is that you've got to get Congress to vote to regulate themselves, which I mean there's been some talks of maybe a vote coming up in the next month or so, but I guess until that happens, all we can really do is track what's being reported.
So, in Quiver Quant, the quantitative is more about the data rather than like quant trading, correct?
Yeah, so it's mainly around like for probably the first like 2.5 years of our existence, we were focused like entirely on just being a data provider. Within the last like 6 months, we've started developing some trading strategies on top of our different data sets, which is where we've gotten a bit more quant based. I mean, you can see that there's the strategy section there, which that's pretty much our only paid section of our site right now. I think it's like a 20 or $30 a month subscription where people can basically see backtested strategies on top of the data sets and then track what's being held by the portfolios, how they're performing, and yeah, just kind of see how they do over time.
Yeah, no, I think that's really because I don't know I see quant and I think in finance like a quant trading,
Yeah.
whatever. But so is I guess in the future like on the horizon, what are the goals? Just keep coming out with like new products and tools for users to use. Is it eventually hopefully a firm or like fund comes in and
Yeah.
it buys you guys? What's the end goal here?
Yeah, so kind of our goal is to become like a one-stop shop for investment research. So that'll mean incorporating some more fundamental data, I think, into our platform down the line, and also just kind of, I guess, broadening our reach a bit to make sure that we can incorporate pretty much anything people would want in making an investment decision in one place, so that we're kind of the go-to destination for where people want to go to, I guess, see like data behind different tickers. So that's definitely, I guess, our long-term goal. Beyond that, that obviously comes with a lot of specifics, but yeah, I'm not really sure where it'll take us.
Yeah, I mean, as if you guys keep putting out, these great tools and people keep coming back and using the site, like, hey, you guys will be in a good position no matter what. And by the way, I will say, as you guys try to build, if you're building out your platform and you need data when it comes to stocks and equities, and if you need, more fundamental, we can help you out there.
Yeah, definitely.
Let's see. I'm gonna see if we have any questions from the chat, or anything else. Any like topics you've been following recently, Chris, that you find interesting, or anything else you want to talk about?
Yeah, I think the, like the congressional stock trading like ban that's being discussed in Congress is kind of interesting. You might have gotten a sense from my discussion earlier, but I'm not super optimistic on the chances of it passing. But with that being said, I think it'll definitely be something worth paying attention to, just because I guess it's kind of interesting to see how Congress is going to handle that topic, because it's something which has such strong like bipartisan support among constituents, but then there's obviously a lot of people in Congress who don't want to ban themselves from
Yeah,
trading.
it's got great support among constituents on both sides, and the opposite of support among the actual people in Congress and making the
Yeah.
laws. I don't know. I mean, do you think that would have like I don't see that bill like having any grand impact on the markets or anything?
Yeah, I don't think it would really have a tremendous impact. Like, there's definitely some politicians who trade a lot, but none of the volume is like incredibly crazy. So I don't think it would really have any grand like impact on any like the
Yeah,
stock.
I'd imagine that if you took the total volume of all the trades made by all the congressmen and senators throughout a single day and combined them, it's still dwarfed by like one
Yeah,
fund's trade on Wall Street,
yeah, yeah,
And and I think too, I mean, like they would still be able to invest in like ETFs and stuff, just not
Mhm.
individual names.
Yeah. That's what it looks like with the current framework. Is they could still do like ETFs, indices, but yeah, not you can't buy like out of the money call options anymore.
Yeah, and see, I feel like from a economic, like I don't know, I'm just theorizing here, but I feel like almost that'd be better because if you think about it, if every single congressman, senator is just invested in the S&P 500 instead of in these like individual names that they might be lobbying for, it might be like a
Yeah,
more holistic that they're just worried about the GDP and the production of the country
yeah,
overall as opposed to whatever names they're invested in.
yeah, definitely.
So yeah, let's hope that ends up being the case. This is a really cool tool here. You
Oh,
can
thanks. Yeah.
just click and see like how the different. What's crazy to me is how some of these people's like returns are not even good at all, and they have like the chip stacked in their favor.
Yeah, it's definitely very case by case. Like there's some people who like it doesn't seem like they spend much time at all thinking about what they're investing in. Or I mean, a lot of people have like there's some people who have like asset managers managing it for them, but it definitely varies a lot politician by
Here's a
politician.
good one. So, Paul Pelosi, or I see a chat comment. Paul Pelosi, great sell on Nvidia. I don't know, because I feel like Pelosi's the one that gets the most, attention and like media attention for the congressional trading stuff. Isn't her husband like? Isn't he actually like a trader, like investor? Isn't that how he's like made his living?
Yeah, that's my understanding. The majority of the trades that are reported under her are usually for her husband, which I'm not sure if he's still an active portfolio manager, if he was a past portfolio manager. I need to look into that a bit more. But yeah, that's one thing is that the new congressional stock trading ban, which is being proposed, would also ban trading by all immediate family, which I mean that makes sense. Like obviously if you've just been like a politician from trading stocks, there's nothing really stopping them from telling like their husband or wife to trade them for them.
Yeah, and not to get political here, but I just wanted to. It's like, and I'm not a huge Nancy Pelosi fan, but it's like it'd be like one thing to me if he was like some retired CEO, never like investor trader, and was making all these like amazing trades. But the fact that that's like actually what he does, and then people are like freak out about it, is it's like there are a bunch of other people that do the
Yeah,
same shit, and it's probably more nefarious when you see
yeah,
some senator buy company in a stock, and then the bill passes, and it's like you see that, and then you see
yeah,
her husband making trades that he could have just been making on his own. Who knows?
yeah, definitely.
All right, well, Chris, it's been a pleasure to get you on the show. I wanted to reach back out to you guys because I'm a big fan, both of your website, of your content on TikTok and all over. And yeah, anytime you guys have new tools, want to come showcase them on the show, we'd love to have you.
Yeah, thanks for having me.
Of course. All right, Chris, enjoy the rest of your Friday. Have a great weekend. Before I let you go, is there anywhere, you want people to come follow you on Twitter, or should I just send them to Quiver's
Yeah,
socials?
yeah, Twitter should be good. We haven't been super active on Twitter. We're planning on getting a bit more active, so that might be a good place to direct people.
Okay, yeah, Quiver Quant on Twitter at Quiver Quant. You got 43,000. You guys are doing all right. I'll drop that in the
Yeah,
chat. Guys, go give him a follow there. Love the Quiver Quant, guys. Chris, again, thank you for coming on. Have a great weekend. We'll talk soon.
yeah, you too. Thanks.
All right. All right, guys, that was Chris Kardatzke from Quiver Quant. Go ahead and give them a follow on Twitter. Cool little website there. Here in about 5 minutes, we'll be joined by Erik at ES Invests on Twitter. Talk to Erik about what he's been trading. Let's do a quick checkup on the markets. Red. S&P is red. Red. Qs are green. Green. What does that mean? What do we think the Dow's going to be? Green or red? Red. Wow. Dow is lagging today. Your Dow Industrial Average down about 0.4%. S&P 500 slightly in the red, while your Qs are hanging on just barely in the green right now. Hey, this market, man, it doesn't matter if it was on what was that, Wednesday? We were up like 2.5%. Doesn't matter if it's today when we're up 1% at 10:30. It's been this market where you just gotta fade those rallies. You can't get faked out by these right now. I am not trusting any rally, especially on a Friday. I don't really know why. I think I've seen some data that indicates that markets rarely like truly bottom on Fridays, but even outside of that, I don't really know why. I just don't trust it on a Friday. It's like trying to think of a good example. It's like you can I don't know, I can't think of an analogy. When something's just a little more slightly less trustworthy because it's happening on a Friday. I don't know. It's like here we'll go like we'll say it this way. Here's a good analogy. If I wake up or say, if I wake up and see someone, or maybe I called someone at midnight, or maybe later, like 12:30 a.m. and on a Tuesday or Wednesday night, and they were asleep, and they text me the next morning, "Hey, why'd you call so late?" And I said, "Hey, I just wanted to talk." All right, that might be reasonable. That happens on a Friday. That's a little bit less. That's a little bit less trustworthy. That's how I see these rallies. Can't trust them. Fridays have been brutal this year. Erik Line, good morning from Cali. Good afternoon from Michigan, from downtown beautiful Detroit, Michigan. We got a sunny day outside. But yeah, Fridays have been brutal. Fridays are interesting because you guys remember back to the COVID markets like 2020. We used to get some crazy Friday market rallies. Some like, where the S&P 500 would be up 2% at 3 p.m. Eastern on a Friday. And then by 4, when the market closed, it'd go up like another 2%. I remember one of the most crazy trades that I saw was on a Friday. Some guy bought, I want to say, like 15 grand worth of Netflix calls at like 3 o'clock on the day they expired, and Netflix went up another like 4 or something crazy percent in that last hour. So I kind of see Fridays as the same, but different. Just completely opposite. That Fridays are your day now, where instead of getting any rallies, you're getting like sell-offs. And I guess, whatever, the market's going to do what it's going to do. Jay Rice is saying Dow is down because Nike's in it. Yeah. I mean, Dow's only comprised of 30 stocks. So if one of them's down, 12%, not great news. Not great, Bob. All right, let's go ahead and that would have been a better analogy than like my booty call analogy. Smart money will wait until 10 minutes close to buy. I don't know. I mean, like, dude, last weekend is when we had going into Monday was when we had the British pound collapsing and all this shit. It seems like even the weekends aren't safe anymore. We could get some bad market news over the weekend now. I see our guest hanging out in the background, Erik at ES Invests on Twitter. Excited to get Erik back on the show. Spoke to Erik, and we're gonna do we're gonna try to start doing Fridays, recurring segment with Erik. So we've gotten some good feedback from having on. So this might be the first iteration of that. So without further ado, let's go ahead and give Erik our very special intro and bring him on the show. Erik, how you doing today?
Dude, I'm starting to get frustrated talking with you because every time I talk to you, it's like gorgeous in your background. I live in San Diego and it's like super cloudy here. So
really?
Yeah, I think you're like virtually sending that nonsense over to me, but we'll see how it is in the winter. I think I'll feel
better. I have a feeling that might change a little bit in the winter. There's been a couple there was a day here not too long ago. It was either this week or last week where it was like pitch black outside in the middle of the day. It was like storming out here. So it is cool. We get to see different, different weather. That's what I like about living in the Midwest. You get the whole spectrum. In San Diego, it's boring when it's sunny and 80 degrees 90 days out of the year, or 90% of the days.
Let me tell you, it's the worst.
Yeah, I feel so bad.
It's really miserable. I highly don't recommend. I'm from New York, man. So when I went to I did my undergrad at Rochester Institute of Technology, and I didn't connect 2 and 2, man. Like when I went to go visit the school, there were freaking tunnels, and I didn't think like, why are there tunnels? Oh, I thought the tunnels were cool. They're painted. Well, the tunnels are there because it snows so damn much that in the winter you literally need to get around like a freaking mole. So yeah,
that's that's Rochester's more like upstate. You're basically Canada at that point.
Yeah, exactly. It's like right by Syracuse, right by Buffalo. It's right off the lake, man. So it just gets an obnoxious amount of snow. So
yeah, wow, yeah. I have friends that went to. I know they have tunnels like that at like University of Wisconsin-Madison.
Yeah,
and some other schools like that where it just gets like brutally cold.
If I could only go back to 18-year-old Erik and say, dude, go to Miami. There's people in bikinis all time of year, better life choice. But no, I went with the tunnels.
Hey, well, you're out in sunny California now, so it all works out. Hey, I don't know if you've done this on the show before, but if you're able to, I know you've got some charts on your like layout, but if you're able to share a screen and you want to share some charts, you can. My charts just for some reason aren't working for me today, so I've been using Google.
Yeah, let me.
So there should be a share button on the bottom of your screen, and what I've found it's easiest to share by a specific window or tab as opposed to sharing your whole screen.
Got it. I'm just throwing like a little cover over my account number.
Oh
So
yeah,
that,
yeah.
you
And
know,
if it doesn't work, then we can get it. If we can get it set up for next time. But I thought maybe you'd have better charts than because I'm just using Google Finance right now, which does
that's
the
a
job.
good one. What do you mean better charts? Google Finance. That's like cream of the crop right there. What do you normally use for your charts?
We have our own. We have Benzinga Pro.
Right. That's what I'm saying. So like, is it just not working for you right now, or?
We use Trading View in Benzinga Pro, and I for some reason they're just not loaded. I think I just need to like clear my cache or something. Like I don't know. I have no clue what's going on.
It's normally, yeah, fair enough. Yeah, give me 1 sec. Let me see if I can get this working. If not, I think, I can just always block it too.
How about you? What do you usually use?
I use Thinkorswim.
Okay.
Through TD Ameritrade. Yeah, it's really more just because I've always used them. I literally started with Thinkorswim, so I've just kind of kept with it.
Yeah, I mean, there's a few kind of, I would say, like cream of the crop brokers and platforms out there to use, and TOS is definitely one of them. And there's a reason. Who came in and bought them? Morgan Stanley?
No, wasn't it Schwab?
Or Schwab? Yeah.
Yeah, I'm pretty sure it's Schwab. Well, I'm having all sorts of hiccups over here too.
All right, well, fine. We'll stick with Google for now. Good old Google.
It's kind of a fun, fun twist on charting, anyways.
Yeah, you don't need too much sophistication. You just need the lines. They still tell the same story, right?
What I'm really looking forward to is some more analogies, because I really like that tinfoil hat Fridays. We don't trust them now. I just love that. So
I don't. I really don't.
I am on board with you on really any sort of conspiracy theory. I'll get with you behind it, just because.
All right.
Who doesn't like a good conspiracy theory?
That is good to know. Yeah, and because sometimes I'll have guests on, and sometimes I need to feel buttoned up, and that I need to hold back on my conspiracy theories. But
No.
I'll go full fledged.
Yeah, I think let's bring the conspiracy theories out, because the thing is, it's like predicting market direction, right? Like, people cast a bunch of lines out there trying to predict some sort of market direction, and more often than not, everybody's wrong. But every once in a while, they hit. So you got to throw the line out there if you ever want to be able to hit. At least that's what I think.
Yeah, and that's I think it's people are tentative to like make predictions because they don't want to be wrong. It's like, get off your high horse. We're all wrong. So say what you want to say what you think, and guess what? Chances are you'll be right about some things and wrong about probably more things than you're right about. But hey, that's what the fun is, and that's why people are I'll get shit sometimes where people will come back to me and say, hey, you said this about this stock, and I'll be like, yeah, I've said a lot of things about a lot of stocks.
Yeah, man, I just took a guess. I took a educated guess, and it didn't pan out. What do you want from me?
Yeah.
So did you see personal consumption come in?
Yes, talked about that at the top of the show. So I thought that was interesting because PCE, real quick, is just another measure of inflation. Some people say the Fed likes it more, cares about it more than the CPI, because it's taking food and energy out, which are very volatile. And so when I woke up, saw the headline right from CNBC saying inflation in August actually was worse than originally anticipated or whatever, I was like, oh my God, the market's going to be down, whatever. And it was up. So that just goes to show you never know how the market's going to react to some of these headlines.
Well, I think there's a couple other things that were baked into it, because with consumer spending coming up a little bit, I actually think the market likes that. I think PCE looking a little better than expected, market likes that. And I think we're starting to get a little bit more of a mixed bag as compared to just doom and gloom perpetually, which is just my opinion. Before we started getting some of these other metrics, I think everybody just thought like we're in for it. But to see spending coming up a little bit, I actually think it's a good thing. What's not great is to see savings. Savings is essentially static month over month, but that doesn't look super great to me. But that's the American.
A lot of people.
Oh, sorry, go ahead.
Yeah, you said it's just the American way to spend and not save.
Exactly.
Yeah, and I was gonna say too, some people have been bringing up the fact that it looks like more Americans are carrying like more, credit debt right now. So certainly some things to be like wary of, to be cognizant and watching. But I don't know. I've been kind of steady where I'm like, yeah, I know there's a lot of bad things that are out there right now. That's why the market, the S&P 500's down 24%. Like, seems pretty fair to me. I don't like. I feel like a lot of the people that are super doom and gloom, super bearish right now act as if we haven't already had this huge market correction, haven't already had the reaction to all of the bad news they're talking about, whether it's, energy situations in Europe or inflation or China or the war in Ukraine. It's like the market knows all of these things.
Yeah, and I mean, as we all know, the market's a discounting mechanism. I think the way that I think about it is, you hit on the topic of debt, which that scares the daylights out of me right now, because the US is what, 31 trillion in government debt, and more importantly, there's like what, 360 trillion in global debt with an increasing dollar. So, I feel like stuff like that is just not the greatest outlook. But I was actually just reading, I don't know what it is, man. Like, I must have got hit in the head or something. But I've been like, for the last 2 years, I've been reading a ton, and I've been going through a bunch of old books that I've read before. And one of the books I was reading is How to Make Money in Stocks. That's a favorite. And what he was saying essentially is that, during bear markets, the market will start to bottom while everybody is as bearish as they could possibly be. And that's typically because, we're just so inundated with what's around us at that point in time that we're not really looking objectively at different metrics. But at least from what I'm seeing right now, I don't see a bottom happening just yet. I do think that there's more to go.
Yeah, and I've been saying that on the show of the past couple of weeks, that while I am, not necessarily buying into the total doom and gloom landscape that some people are laying out there, I do think where we haven't seen the bottoms, and we've got some more to go. But I see people throwing out some like crazy S&P targets and stuff. I think. And I'm, like I said earlier, like, I'm okay with making a prediction, saying what I think is going to happen, and then being wrong about it. I think probably the most likely scenario, we'll see the S&P 500 come down another, 10% or so, maybe around that 3,300 level, and then hopefully start to come back from there. I have a one point on your, it tends to bottom when things are looking the worst. That's why I've been paying a lot of attention close to this AAII sentiment survey. Last week made headlines that we hit the 1-year bearish high. This past week, the bears basically stayed the same, but you saw people get slightly more bullish. You saw, that number and the AAII. This is all. It's the American Association of Individual Investors. So basically, all retail investors.
Oh no, that's our metric, retail. Oh no.
Well, I'm saying my metric, I'm saying when I see retail getting like even more bearish than this, like getting, if I see retail up to like 70% bearish, I'm going to get pretty bullish. And then like that's like what you said in the book, you typically see markets bottom out when it's the most fear, when people are the most scared. And coincidentally, the same thing, our 1-year bullish high just happened to be right at the top, at least the top for a lot of retail driven names, growth names like, Bitcoin and Tesla and all these things topped out in November when we were the 1-year bullish high. So I don't know. I'm not saying like, oh my God, we should all like, just because we hit 1-year bearish highs means the markets have to go up here. But if I see this number continue to increase of the amount of retail investors getting bearish, it's going to start perking my ears up.
Honestly, this is fascinating. I haven't seen this before. So this is one of my favorite things about doing stuff like this, is getting exposed to different tools. I like to test these like over the long term and create a trend. So I'll probably do that with this if I can get historic data for it. That would be super fun, because I think one of the things that this is perfect.
Yeah, right here. I just dropped the link in the chat. So literally, if you just Google AAII survey, like it'll be the top one and they do it every week. So it's like this came the week ending September 28th,
Right.
which was Wednesday. So like every Thursday they put out the previous 7 days, and they just poll all their members. Say, hey, are you feeling
Yeah.
bullish, neutral, or
I
bearish?
think Yeah, I think that's super fun because typically I would consider retail traders like if there's the tail of the dog, it's like the hair at the end of the tail of the dog in terms of determining market direction. However, I have found some of the most interesting relationships over time studying like statistical correlations with stuff like this. So, correlation does not equal causation. So I always throw that out there when talking about stuff like this. But it's fun to look at, man, because yeah,
Yeah, and honestly, I'm wary of like people trying to sell strategies and stuff when they're like, "Oh, it's been tested this, back tested that."
everything
I've
looks
read
good back tested.
exactly. Yeah,
Everybody's a
everything
genius.
looks good back tested.
Yep. Yeah. If back testing were like the real way to make money, literally everybody they wouldn't know where to put all the money. They would have to figure out a place to house all of the gold coins everybody would have.
Yeah, and I almost if someone was really trying to sell me on a strategy, like I feel like the more they bring up back testing, the more I'd be like, yeah, I'm not
If
sold
yeah,
on that.
if that's like the central theme of the way that they prove efficacy, that's a giant problem. The way that I think about back testing is that it's important. It's absolutely vital to looking at a strategy. For me, that's like one of the very first things you can do to even see like initial proof of concept. Is this worth spending any more time on? Because, like we just said, most things look good back tested. So if it looks bad back tested, that's a big problem. That's a pretty much a colossal waste of time.
Yeah, and I think where it can be helpful is if you have a strategy or fund that's been around a while and you can see, okay, how did this fund hold up during the COVID crash? Or what did it do, during this market downturn? If you can
Exactly.
see,
Historic precedent.
right, during like certain times and it's been around a while. But if someone's just like, oh yeah, I've been running this program for the past 2 years, here's what it's done. It's like, all right, that's not going to give me much confidence that it's going to be able to do that for the next 2 years, but who knows?
Bingo. Exactly. And I think, I mean, when I was going through building out like my primary strategies, I literally probably have spent 70 to $80,000 on data so that I could successfully back test like intraday minute options information. And like going going through and building that is super useful, but at no point would I ever see something that back tested really well and then just go full bore into it. It's just that's not how it works. There are limitations with back testing. Yeah, you can't replicate all of it.
Yep.
So,
Let's see. So go
oh,
ahead.
I had a question for you.
Yep.
What do you think about the news? Well, the continued news with Russia and Ukraine, obviously not getting political, but just the impact on the broader markets. Because I'm fascinated by that right now. They just went through the ratification, quote unquote, of essentially the annex of 4 regions in Ukraine, and there's obviously some big conversation across the globe on what that means. But I'm curious, have you come across that news yet? And if so, what do you think about it?
Yeah, I mean, I followed that news pretty. I wouldn't say like I'm like super in the weeds on it. I
Mhm.
know kind of Russia came in, claimed these 4 regions. They were calling them kind of sham ratifications because basically they voted, but it wasn't really a vote because people were saying they were held at gunpoint, which actually I don't know, because it's very controversial. Like going back in 2014 when Russia annexed Crimea, something very similar happened where the Crimeans voted
Yep.
with a huge majority to join Russia. So Russia's saying like, "What are you talking about? These people voted to join us. Like we're doing the right thing." And then people are saying, "Oh my God, no, that wasn't legit, whatever." And it's tough, I think, here in like the West with Western media. I mean, with your like military background, how much kind of I think like information control goes out there with this stuff. So it's yeah, I mean I try to find like independent journalists that are out there like talking about this stuff. But as far as outside of the actual like war stuff, market impacts, I think the biggest thing will continue to be impact will be seen in the energy markets. Um, right now, I know a lot of people talking about natural gas and liquefied natural gas going into the winter. So I think I think just following these trends, like seeing, let me share my screen back and we can look at, you know, the United States Natural Gas Fund and kind of see the fluctuations that this has had over the past 6 months or so. Huge rides up, dip down, big ride up, big correction here, down 30% in the last month. So I think following the news, being able to trade stuff like this that's moving from it is probably the way to do it. I don't know if I have any like huge takeaways. How about you?
It's fascinating because I think the storied history between Russia and who surrounds it is, I think, very difficult for Westerners to like truly comprehend. I think a lot of the civilians in those border states are conflicted in and of themselves, because some of them, a couple of my good friends are Russian, and some of them like truly think that it's the right thing, so on and so forth. So I think for Westerners it's difficult to weigh in, but from a market perspective, it fascinates me. I was watching Putin's address, and now all of a sudden the conversation of like nuclear conflict comes back up on the table, which to me is the real point of interest. Not necessarily, that I think we're walking into the next apocalypse, but the fact that even came up in like a overt press conference from Putin. I'm literally shocked that the market is not reacting in terms of volatility a little bit more than that. But I think that also tells us a little bit more about the message. I always trust what the market is pricing in more than, my perception of something. So I think what I've been doing with stuff like that is volatility trading, man. That's been by far the most successful strategy for me so far.
Like trading the VIX and stuff?
Not necessarily just the VIX outright, but trading volatility moves. So the VIX has been actually a really healthy trade for me. But like earlier this week, I faded XHB. I think I talked about it on YouTube Live. I did on like Sunday. It was like super last minute, but I essentially came in on Monday, faded it, got out Tuesday. And it was mostly a volatility play because we were coming in on like the new housing report figures. What I'm mostly noticing is with the VIX starting to centralize above 30, which is actually like a pretty significant outlier move in the scope of the past 6 months. I think we're starting to see a lot of volatility being overstated. So I'm either playing expansion of volatility and then selling quickly, or looking for contraction. I think like with something like VIX, it's in like a middle ground for me. I wouldn't trade VIX future specifically, at least right now, because it has room to go up if it wants. It's also elevated, so there will be natural pressure for it to revert to the mean, that kind of thing.
Yeah. And I think any type, like, you need to find those kind of different trading strategies right now when you're in a adverse market environment, because it's kind of like a saying, like in a bear market, bulls lose money, bears lose money. It's like not easy, right? It's not as simple as I'm going to buy puts or I'm going to short this and you're going to make a bunch of money in a bear market. It's oftentimes not that simple.
It's I think for people it's like difficult cognitively to get around trading the other side. I found early on I forced myself to like truly do my best to be direction agnostic, and even though I say that, I still have a preference for bull markets, and it's because of the positive drift that we know exists. But yeah, being able to trade both sides, if you're a trader, I think is super important. If you can only trade bull markets, you lose out on so much profit potential in bear markets. And I mean, that's myself included. Like so far this year, I've been pretty gun shy, and I'm up. I did a video not too long ago. I'm up like very modestly, 7.9% return on the account, which is slow for me at this point in the year.
On the month, you said?
No, on the account. So far the year, that's it. I'm up.
I mean, hey, you're outperforming the market by like 30%. Nothing wrong with that.
I never like using the market as a benchmark. I always think that's a logical fallacy. Like if the market is down, like my benchmark isn't being down less. Like I'm here to make money and interface with the market my best to try to make money. So even if the market's down, my job as a trader to make money. But anyways, my point being is it's been a slow year, man, because I've been very gun shy. After the COVID market, that threw me for a loop, where I was really gearing up for a prolonged bear market. The average bear market is just shy of 300 days long. So I was gearing up for that. And then COVID literally was, that bear market was like minutes, and it was a couple days. And I missed out on a lot of that rally for the same exact reason. So I don't know, man. This is the fun part of the markets. I've been doing this for 15 years, and still all the time I'm seeing stuff I've never seen before.
Yeah, I couldn't agree more. I probably haven't been doing it as long as you, but seeing things every day that are new to me, and that's still fun. But Eric, we are coming up a little bit past 1, so we gotta wrap. But it's always been a great conversation as always. Looking forward to doing this kind of on a weekly basis. Yeah. I'm gonna drop your Twitter in the chat at ESInvest for folks to go give you a follow. And have a great weekend, man.
Take care, sir. Good chatting.
You too. All right, guys, that was Eric at ESInvest on Twitter, dropping that in the chat right now. We got a run going over to Money Mitch. He's talking to Spruce Point Capital at 1:15 here in about a couple minutes. So without further ado, let's go ahead and wrap this stream up. Have a great weekend, everybody. Smash the like if you have not already. We'll be back on Monday. Till then, have a great weekend.